Hello everyone, this is David Blair, Crosshairs Trader. Today I want to talk about weekly charts and what we Crosshairs traders discuss as far as the bigger time frames. We feel like the bigger time frames allow us to take advantage of much longer moves and multiple dollar moves over weeks at a time as we look for signals to correspond on the daily chart with the weekly chart. Of course, when we get the signals in our radar screen that we have developed, we can then find these signals on our weekly and daily charts. So let's take a look at what I'm referring to here. Let's begin with a down trade and the way this plays out on the weekly and the daily charts. Let's take a look at U.S. Steel, for example. U.S. Steel from July of 2011. You can see that our bearish trades, down trades, short trades, whatever you want to call them, are in red, and they have the crosshair that has fired DCH. Again, DCH simply means that we look for a dual chart crosshair, not only the signal here on the weekly chart, but also a signal on the daily chart. And there are different types of breakouts and breakdowns that we look at as well. There are 5. We look at corrective breakouts and breakdowns, extended, pullbacks, consolidations, and tests. And there's different ways to trade each one of those based on whether or not they're corrective or consolidation or pullback, extended, or test. The way we trade those on the daily chart is based on the way they play out on the weekly chart. So when we look at U.S. Steel here back in July, August, September of 2011, you can see the DCH. This is basically a move down, a run, and then a pullback and a break back down. So a pullback, breakdown, and usually what happens on the pullback breakdown is within the pullback on that weekly chart, it plays out by going sideways on the daily and then starts breaking down and giving us moves in the same direction as the DCH there on the weekly chart. Then you can see another one in April. Started to break down on the daily chart, gave us another down trade. That's a DCH on a bearish stock. Now, most of the ones we're going to look at now are going to be to the upside as we're looking at these now. In May of 2013, we've had a long bullish market, so most of our examples here are going to be bullish. But let's take a look just quickly at the weekly daily combination of these types of breakdowns and breakouts that we've discussed. The 5, the corrective, extended, pullback, consolidation, test. I'm going to give an example of each one of those and using the daily chart, and then I'm going to switch to the weekly chart and just give you several examples of the DCHs and what to look for on the daily chart. Let's begin with CPN. This is an example of a corrective breakout on the weekly chart. You can see that here. You can also see it here in the beginning of 2012, but here in March, April of 2013, a corrective breakout usually has a U or a V shape to it. Look, very volatile, a sharp move down, then a sharp move back up, but it still holds on to a trend. And so CPN established that corrective look. Then what we look for on the daily chart with this corrective break on the weekly is we look for a rest or even a comeback and a test of that previous breakout. And we're going to look at some tests here in a little bit. So on the daily chart, what you'll find, this is the corrective look on the weekly. Goes sideways, rest, and then breaks out and gives the corresponding itch on the daily chart to go with the DCH on the weekly. That's a corrective one. Now, if we were to look at some others firing right now on the weekly chart, won't show the daily chart, but if we look at them on the weekly chart right now, we have PXD, corrective breakout on PXD, ETN, and you can see that look here, corrective V-shaped look. So on the daily chart, we're looking for a rest and even a test to come back and give us an opportunity on the daily chart. If you were to look at this on the daily chart, it would most likely look extended. All right, RAI. RAI is an example of an extended move as far as the DCH is concerned. In other words, you have a DCH here, but it's already had a move up to a resistance level, and I've drawn some lines here. Let's just move one of them. And so what we want to see as it moves up to the resistance level is we want to see it either rest below that breakout level or break out and come back and test and give us a trade. So when we look at RAI on the daily, you can see how that's worked out. We had this breakout here in April, came back, and what I prefer is for it to rest, even come back and test, which it did, then give us the itch, and that's the one that is much more effective. And again, itch is in the crosshairs. It corresponds with the DCH on the weekly. So you can see how RAI played out here. Now TSM is another example of one that is taking place right now, an extended breakout attempt. You can see how it was extended here. A lot of times these extended ones will look corrective also. It can be either one, but same look, same idea. So now on the daily chart, we're going to look for TSM to either come back and test the breakout, go sideways and rest, and give us another signal. All right. Pullback breakouts. Let's take a look at a few of these on the weekly chart. LNG. We had some pullbacks here. It never gave a signal, I'm sure, on the daily chart. Here with this false breakout, but a couple more DCHs here on the weekly chart. These are simply pullback breakouts, and you can see the last one. We had a move up, 3 weeks of pullback, and then a breakout again, and we should have a continued move here on that daily chart. Now, one thing that I also point out to crosshairs traders when we're studying together is we do not necessarily have to have a signal on that daily chart. It could also simply be a breakout that goes along with the DCH, a sideways move and then a breakout. You do not necessarily have to have a signal. It is best as far as being able to see the trade to have one, but you don't have to have one. How about another example? How about CVS? See how CVS recently has had a nice, this is more of your corrective breakout. This was a nice pullback breakout, failed though, but here's one nice pullback here in April. You should be able to see some trades here, several here. Here was one from the early part of 2013. Then we had another one, and then another one. And that's what I like about these weekly chart trades. If you miss one of these, it more than likely over time will set up another trade for you on the daily chart, and you can see that here just over and over again. You can have opportunities to trade these. So let's take a look at a few more here that are playing out currently on the weekly chart without showing you the daily. IVZ. You can see how this one's played out. Nice pullback, even tested the previous breakout and continues to run higher. TJX. Nice pullback, broke out, continues to run higher. How about PPL? You can see where it had some nice moves here, but here was your pullback. Actually came back and tested. A lot of these pullbacks will do that. They will test the previous breakout, fire a signal, then give us an opportunity on that daily chart. PLD. Nice pullback here and broke out on that pullback. Ones that are firing currently. SYK. See that nice breakout here? I like to use green lines for my support areas. Nice pullback breakout on SYK. STI. Another one. Nice pullback breakout here. You can see the nice trend breaking out. You can also look at this as a consolidation breakout. And another one that we've actually been discussing in the morning videos is PCLN price line. Had a nice pullback, broke out. First one failed, pulled back, broke out, and you can actually see the itch here. Went up for 3 days after that one, but look at this last one, just continues to rocket higher. So that's your pullback. And then you're going to have ones that have a long consolidation on the weekly chart. Take a look. Notice the consolidation. I like to draw a box, and a lot of times these consolidations will come back and test also. But a nice consolidation breaks out, pulls back, and then continues to break higher. HXL, and you can see that consolidation play out on the daily chart also. And then it broke, came back, tested, and continued higher. How about EL? You can see EL had a nice long consolidation on the weekly chart, and here's your consolidation playing out. Here was one, developed a resistance area, pulled back right underneath that breakout, and then fired another one. Kind of an ugly chart there. But now it's actually firing another itch along this trend on the weekly, and after this breakout again, you usually have multiple opportunities to trade these after there's a signal on the weekly chart. So there's a consolidation breakout. Then a lot of times you'll have a test of the breakouts. Take a look. Notice these nice run, rest, and then running again. This is a illustration I used in the last video. Still here, and it's still running. But notice the DCH here. Fired a DCH, then did what? Came back, tested the breakout, and in that test it passed and continued higher. So then you're going to have these that fire, this itch with that DCH, but then it's going to come back, and after testing it's going to give you another itch. And they have earnings coming up. That's why I have this date here. But you know, they do not have to fire at the same time. They will be able to fire signals on the daily over weeks, which will continue to verify the DCH and confirm it. Alright, let's take a look at a few more that are testing right now. How about LCC? Look at this. Broke out, came back and tested the previous breakout and now is breaking out again. Breakout, DCH came back. So on the daily chart, you should have had some kind of rest right here, and then gave you an itch, corresponding signal. How about Amgen? Amgen on the weekly chart, take a look. It broke out, came back, tested that breakout, and then went higher. So when you look at this daily chart, take a look. You can see where we went higher, came back. This was the test from the weekly chart, and then broke out. Gave us a nice trade there. How about MO? Look at MO here. Broke out on that DCH on that weekly chart. See that? And tested. That was a corrective breakout. We like to see those test. Came back and tested that breakout and then went higher. And there are your signals on MO. And how about another new one here? How about one that people like to watch? Traders like to trade this one over and over again. Pullback breakout on Google and continues to break higher. So those are the types of breakouts we look at. Signals on our weekly chart. We look at corrective, extended, pullback, consolidation, and test. We then look for corresponding signals on the daily chart that agree with the weekly chart in direction, and oftentimes they will agree as far as pulling back and testing those breakouts or breakdowns. When we're looking at down trades, all we have to do is turn our monitors upside down when we look at bearish or short or down trades, and we're able to classify these types of breakouts and then go to the daily chart and work on what I call, and what I'm sure many of you have heard, the art of the chart, where we take the mechanical signals and then we use our discretion to trade those signals, and that discretion on the daily chart is found on the daily charts as we use it in combination with the weekly. If you've got any questions or you are interested in studying how to trade in the Crosshairs, please contact me at David at the Crosshairs Trader